Hi there, welcome to Kneppy Invest and welcome to November 25, 2024. Just can't believe it's only 1 month till Christmas. In fact, 1 month to my least favorite time of the year. As an investor, that's very important because we have quite a few public holidays during the Christmas New Year's period. And if I had my choice, I'd have trading every single day, maybe except one. But I am weird like that. And I don't think I'd have many people who would agree with me. But anyway, 1 month left until Christmas. And on the flip side, though, I do work a lot during that period. And as a shift worker and someone who works for the government, they do have a generous, what do they call it? Penalty rates during that time of year, and deservedly so, because a lot of people want to spend Christmas with their families. Yet I do work for a 24/7 organization, and someone has to work. And the best way to get people to want to work on those days is very generous penalty rates. Okay. So let's get into the video. And about 1 hour and 20 minutes left of trading today. And overall, today could be classified as a pretty good day. Apart from resources, down 0.18%. I'm not sure what that is. Gold, iron ore, no idea, but not surprised the rest of the market is up because we did have a pretty good or generous lead in by the Americans or Wall Street on their Friday session. So that has translated to our market. So the agenda for today's video, go through the ASX today, looking at the best and worst performing sectors, indices, and also companies, or also continue the top 5 stocks of the day. Now, I'm going to do a standard video on the stock of the day and also the small cap of the day, but I'll briefly mention those two companies when we have a look at the top 5 stocks of the day. Both of those companies are in the top 5, by the way. And then if I have any time, I want to keep this video to about 30 minutes. If I have time, I'll have a look at some of your comments and or charts. In fact, quite a few comments are in or is or are in relation to charts. Yeah, so I could maybe kill two birds with the one stone by doing that, although I don't like to kill stuff. Don't like to kill animals, except mosquitoes. I don't mind killing mosquitoes or flies, that sort of thing. Okay. In fact, spiders, if there was a spider right here, I would not kill it. I'll take it outside. Even flies, I prefer to, try to force it outside. So maybe a bird could eat it, that sort of thing. Anyway, let's have a look at the ASX today. I am trying to get my bearings here. I'm on the right page. I was looking for the right page, market index, and I am right. Now, I did actually save a couple of tweets, but I'll probably look at those tweets another day. One was on the Australia, Canada versus USA percentage household debt versus disposable income. A very big disparity between Australia and Canada versus USA. USA is where everyone should be. Australia and Canada have significantly increased over the past 20 years. So those who say things haven't changed over the past 20 to 40 years, things have changed. When you do look at property prices or household debt, and the reason we have high household debt is because of property versus disposable income. And the other tweet was on Elon Musk saying, I think it was in regards to inflation and government spending. So a nice debate there among a lot of people who were replying to that tweet. Forget who it was by. Anyway, let's go and have a look at the ASX today. Now, I'm already falling a little bit behind where I wanted to be. And so pretty good day. Generally flat today, just looking at the XJO and XAO. So it hasn't been really moving up or down. That could be a good sign for the next or the remaining hour and a bit of trading. And don't forget, sometimes you will see a bit of a sell-off or a buy-off, if that is a word, during the last hour of trading. We saw that either last week or the week before, where by the time I started recording the video and by the time the market had closed, the XGO had fallen a fair bit. I can't remember exactly what day that was, but it does happen. Now, sectors, pretty good day for real estate, discretionary, healthcare, utilities, all up by over 1%, and even industrial staples up almost 1%. A negative day for materials and financials, both flat. So maybe a bad day for the banks, maybe a bad day for BHP, Rio Tinto, and Fortescue. I'm just guessing right now. Maybe there are some other commodity that's down, maybe gold. And I'm just having a look at gold here. Gold is down a little bit, but not all that much. And where's Banks? Banks is down as well. So I will not be shocked as I open up the XTL that I'm going to say 15 companies up, five down. And I would say, I'm going to guess right now, three of the major banks are down, one is up. And I'm going to say that CBA is actually up. The other three are down. And that is just weird because CBA is by far the most overvalued of the big banks. So let's see how right I am. 15 up, five down. Close. 14 up, six down. That reminds me of the 14th of June, which we all know is the greatest day in the year. By far, not even close. There's no debate. Now, let's have a look at which companies are down. So we have ANZ, NAB, Westpac, and I was wrong. CBA is down. And Macquarie Group as well. I forgot about Macquarie Group. So all the banks are down. BHP is just behind them, only up 0.14%. And as we turn attention to the best companies, best performing companies, not the best companies, in the ASX 20, wouldn't be surprised to see Goodman Group at the top. Oh, it's third behind Wesfarmers and Transurban. The only reason I went with Goodman Group is because real estate is up over 2%. And Goodman Group is by far the biggest company within real estate. So there is a bit of a relationship between real estate performance, the sector, and Goodman Group. CSL had a good day as well, which makes sense. The healthcare sector has had a pretty good day as well. Okay, let's turn attention to the best and worst performing companies on the ASX today. Look into top gainers and top losers. There should not be any massive surprises here. I did pay a little bit more attention to the market today than I usually do. And there are reasons behind that, which I won't delve into this video. So no surprises here. Life hire, takeover bid. So no shock there, up 68.452%. Now, the only shock there could be, I'm pretty sure the takeover bid is at 4.5 cents. According to this, the share price is 4.6 cents. So usually you see the share, when there is a takeover bid, the share price won't go straight to the takeover bid price. It's going to be a little bit below. So you need a little bit of a difference between the takeover bid and the share price because there's always going to be a little bit of risk the takeover won't go through. So what the market is suggesting here is not only do they think the takeover bid is going to go through, there's a possibility the market thinks there's going to be a bidding war, which I wouldn't be surprised if there is a bidding war. The reason I say that is we're starting to see a little bit more bidding wars out there. Now, we're talking about Vonix between Swoop and Maxitel and also Self-Wealth. There is a bidding war for that company between Bell Financial Group and Axie or something. So maybe that's what the market is thinking with the share price now above the takeover bid price. Streamplay Studios, I have a feeling they did an acquisition. I just want to confirm that. Acquisition. Oh, also there was a price query because on the 14th of November, when the company went into trading halt, there was a lot of buying coming in. So loose lips, if you think. Now they did release a price query and announcement in regards to an acquisition. Probably why the share price is up. Maybe the market's thinking this is a pretty good acquisition. I'm just going to have a look at the price query. I didn't have a look at this earlier. I wouldn't be surprised. Yes. And the reason I've opened this up and had a look at it is because typically the answer to question number one is no. We don't have any information that we have not released to the market. And in this case, obviously Streamplay Studios had information they had not released to the market. Someone won't say there was insider trading. Maybe someone was mentioning this particular acquisition at a cafe and someone overheard them. And then they bought on that fortuitous overhearing of a conversation. That could have happened. So, but it does look suspicious. Now, yeah, again, just because it looks suspicious doesn't mean anyone took advantage of this information that had not been released to the market. So they did answer yes. And if they answer yes, they have to answer question two. So they said no to 2A. And in 2B, can an announcement be made immediately? Please note, if the answer to this is no, you need to contact us immediately to discuss requesting a trading halt. And they've answered yes. The company has executed a binding agreement to acquire 100% of Noodle Cake Studios. And that's it. That's all they have to answer. Anyway, so yeah, insider trading, loose lips, who knows? Small company. I have no idea what the market cap of this company is. 17.3 million. It's a small company. Paradigm Pharmaceuticals. So they did not release any announcements today, but the share price, this was a company I featured in my technical update video of a chart that was looking interesting and continued momentum in the share price of that company, up 33.85%. Novonix, I will have a look and discuss Novonix in my top 5 stocks of the day. Matrix, Composites, and Engineering. I really wanted to feature this company as my small cap of the day last week. I had a read of their announcement, no, their presentation. It was either the AGM presentation or another presentation. I was really intrigued by what I read, and today they have released an announcement. So I will briefly mention Matrix Composites as one of my top 5 stocks of the day, and also I will record a standalone video on this company, up 26.1%. Veeam is interesting. Veeam was mentioned, I believe it was Livewire. Someone was asked which 2 companies have the potential to be 10 baggers, and they suggested Veeam and also Catapult. Now, if Veeam is up by 23% and 26.56%, they have not released any announcements. And if Catapult is up by a lot, and it's not. Okay, so I'm going to say if both companies up a fair bit, that would suggest that a lot of people read this particular article. I can't remember exactly where it was on these 2 potential 10 baggers. People love 10 baggers. In fact, I'd say more people would love 100 baggers. I've not had a 100 bagger. That is an ultimate aim for me. What else do we have here? SG Fleet, take over a bid for that company. Not surprising. I do think there's a lot of value in that company. P ratio is about 10. Dividend yield is about 7%. I'm not sure if there's going to be much growth in that space, but there is regulatory risk. So I'm pretty sure it's a private equity trying to take out SG Fleet. A few other companies here on pretty big turnover, James Bay Minerals and Bright Star Resources, but I'll move on because, again, I want to limit the length of this video. So let's have a look by markup just to see if I've missed anything here. Vulcan Energy, share price really running up strongly with that company. Probably wouldn't trade that right now because the chart, in fact, I've got it right here. The chart looks eerily similar to what it did back in May. And then the share price pulled back. And that pullback was a really healthy pullback. In fact, when you see the moving averages close together, the share price then broke out. I just wish I had the kahunas to take a position in Vulcan Energy on that breakout. And that was on the 25th of September. So 2 months ago. That was a classic breakout. Anyway, I don't think it was a classic breakout in terms of release of financial news, but a classic breakout because it went above, the share price went above the downtrend, the short-term downtrend. Anyway, okay, what else? Appen, BrainChip, Novonix. I'll talk about Novonix. Electro-Optic Systems doing a divestment. Looks like the market continues to like that particular divestment. Okay, let's turn attention to the top losers today. Eagle Mountain and Yandal Resources. Both companies did release drilling results today. That's why the share price is down. So I don't have to really look more into those 2 companies. I don't even think the chart, although the chart for one of these does look interesting. I'm not sure if it's Eagle Mountain. No, it's definitely not Eagle Mountain. This is not looking interesting at all. In fact, it's complete opposite of interesting. So it must be Yandal. I did have a look at Yandal. It was either, I forget exactly when it was, a few weeks ago. Yeah, there was a breakout in this company on the 21st of October. So 1 month ago, the chart started to look interesting and now the pullback. So is this a buy the dip situation? Now, it was on drilling results. So it looks like the market did see something negative in those drilling results and pretty big volume coming through today. So I'd probably say no to this one as a buy the dip situation. Infocus Group. Share price had rallied the last few days. They're doing a capital raising, and that's exactly what management should do. The share price runs up, do a capital raising. And when I say run up, I'm talking about share price increasing. This was a small cap of the day, by the way. Share price increased 167% on the 21st, and then a further 15% on the 22nd. The management saw that, and they've decided to do a capital raising. I'm pretty sure the capital raising is at 3 cents. So 2.8 cents could be a good price. It's not a big capital raising. I believe it's 500,000. Here it is, capital raising. They released this on the 22nd. Capital raising, yeah, 500,000. That seems really small at 3 cents. Would I be interested in this company? No, not right now. I would have preferred a bigger capital raising, to be honest. I think they should have taken advantage of that. Big volume coming in, and this capital raising could have destroyed the positive sentiment in this company. It could. Not sure yet, but it could. And what else do we have here? That's it. Oh, IPD Group down 11.5%. I haven't yet decided the stock of the day. It's between IPD Group, Novonix, which more than likely won't. So I'll put that in number two or number three. And the other one is Pro Medicus. Now, Pro Medicus share price isn't up a fair bit, but they did have their AGM, and that looks like I shouldn't say it's an intriguing company. It's a very well-run company. It's one of the highest quality companies on the ASX, but valuation. And I have been tempted to take profits in Pro Medicus over the past year, and I've just held off. And that has been to my advantage because the chart for Pro Medicus continues to look really good. Now, I'm just going to have a look at the chart or the share price movement of Pro Medicus. It should be up 2.95%. I'm not sure if that deserves to be the stock of the day. No, I haven't decided yet. I'll decide during the next or in the next 5 minutes because by the time I finish top five stocks of the day, I have to make that decision. Okay, and that's about it. Let's have a look by market cap. Ora Banda, there's quite a few gold companies down here. So Ora Banda, Resolute, Catalyst, all down a fair bit. Cuscal, a new IPO, a new listing. I will briefly talk about that company. Down 7.8%. So it looks like down on initial trading. That's interesting in itself. Eroad's here too. That's they did release not results, but they did release financial year 25 financial guidance, and also the CFO resigned. And I think maybe that's why the share price is down 6%. And I'll discuss that company maybe in a second or so. Okay, not maybe, I will discuss Eroad in a second. Okay, so coming in number five, we have two companies, Smartpay and Eroad, both New Zealand-based companies. One company released their results today. That is Smartpay. Share price is down a little bit. At one point today, share price was down 10%. Now, I had a quick look at I think it was a presentation. Nothing in these results that excited me. And I just had a quick look. I think was it this one? Yeah, this one here. It looks at the revenue, EBITDA, profit before tax, and cash flow over the last 5.5 years. Now, EBITDA is a little bit different because they've got looks like 7.5 years here, but they have a normalized and non-normalized half years for first half of financial year 24 and first half of financial year 25. Not sure why they've done that. They've also done that with profit. Now, the one thing you'll notice is that EBITDA has dropped this particular half year. Profit before tax has also dropped significantly from $5 million in the second half down to 0.7 million non-normalized and negative normalized. And even if you compare it to the previous corresponding period, a little bit of a drop. Well, that's a bad way to say it. A pretty big drop in profit. So I was thinking, I'm not sure the market is going to like this. However, maybe the expectations were there that this was expected. So maybe this was expected, but it was really interesting to see the share price pull back significantly on open. Share price was down about 10% at the low, and we have seen the share price recover, which tells me the market really knew this was going to happen. And I think one of the ways you could justify that thinking is just by looking at the chart. So let's have a look at the chart for Smartpay. We have really seen the share price pull back over the past few months, more than a few months. Share price moved into a downtrend back in April. So it's only about 9 months ago, 8 months ago. And the share price at that point was $1.30. I was a shareholder back then, and I sold because the share price moved into a downtrend. And this is another case, even if you might like a company, of just taking advantage of technical analysis. The chart told me to sell. and I sold, and the share price has fallen significantly since then. In fact, the share price has halved since then. I got out about $1.20. Share price is now at 61.5 cents. There's no real sign the downtrend is coming to an end, but we have seen a little bit of buying today, which is maybe a good sign that the worst is already in, but the chart does not look good. Now, Eroad was the other one. They released not results. By the way, Smartpay was full-year results. Eroad released sort of guidance. Yeah, Eroad on track to meet financial year 25 financial guidance. So 89 pages long. Now, they also released another announcement, resignation of Eroad Chief Financial Officer. And I'm thinking one of the reasons why the share price might be down today is because of that, because maybe the market knew this particular Chief Financial Officer, Margaret Warrington. See if my memory is any good. Yeah, Margaret Warrington. So maybe the market knew her, particularly New Zealand investors. This is a New Zealand-based company. So maybe this was a really well-regarded chief financial officer. She's not resigning immediately. So effective 21st of February 2025, maybe she's retiring. Maybe she's got this better role. They have no one at this point in time in place to take her role. So they were going through a recruitment process. But what this means is particularly if Margaret, looks like thanks go to Margaret, and we wish her the very best for her new role returning to Somerset Group. So it looks like she's moving to another similar role with another company, which is fair enough. Fair enough. But the reason why the share price might have pulled back on this news, particularly if she's well regarded, because there's more risk. The market doesn't know who the new CFO is going to be. It could be someone really good, could be someone really bad. They just don't know. So sometimes you will see the share price pull back on these sort of announcements. The financial guidance didn't seem too bad. I thought, okay, sounds okay. Wasn't absolutely stellar. So I didn't expect the share price to go on a massive run, but the share price has dropped a little bit. I was a little bit keen in this one. So I was trading this for a brief period in June through to August because the chart looked interesting. The share price has pulled back, and it's pulled all the way back down to where it started. And I was thinking around this level, around 80 cents, is a good level for this company. So I was thinking this could be a mean reversion sort of play. It's reverted to the mean, and unless the share price drops here, we could see another rally in the share price. I wouldn't be surprised to see that, particularly if the company keeps on growing. It's growing slowly, but it is growing. Okay, so that's number 5. We have Smartpay and Eroad, 2 New Zealand-based companies. Coming in number 4, we have Cuscal. It's not even, there it is, Cuscal. One of the largest IPOs on the ASX this year. If I have no idea what this company does, if you don't know what a company does, have a look at, particularly if they've just listed, have a look at their prospectus. But the prospectus is 308 pages long. So I'd recommend not having a look at every single page, but just knowing what to look at. Unfortunately, I should have opened this up before I started recording this video. So what I'm going to do is I'm going to go to Market View. The reason according to this, Cuscal has a very similar, logo than Coca-Cola Amatil. So Coca-Cola Amatil was on the ASX until maybe 5 years ago, and I'm pretty sure they had the same ticker code. So it looks like Market Index has to change logos. Anyway, and in fact, I can tell you exactly when Coca-Cola Amatil went off the ASX, because it's going to be shown. Yes, there is a takeover bid for Coca-Cola Amatil on the 26th of October, and the last trading day was in April 2021. So this is not Cuscal's chart. That is Coca-Cola Amatil's chart. Yes. And the whole reason why I was going to go in Market Index was to open up the prospectus. Okay, so this is the prospectus for Cuscal. Not even sure how to pronounce it. Now, can I tell what they do just by looking at the homepage? Construction, maybe? Okay, now the reason I like prospectus is because if you go to the contents, you'll see industry overview, which is 40 pages long, a company overview, which is 34 pages long. You get a load of information. This is a trove of information, not only in the company, but the industry. I have found a lot of interesting stuff within prospectuses on just industries. That's all industries, not necessarily the companies, just industries. So let's have a look at the company overview, page 87. Also, financial information, 55 pages long. You have risk factors, key individuals, that sort of thing. And a lot of prospectuses are very similar. They all seem to be very similar, almost exactly the same way laid out. Some may be a little bit smaller, some a little bit larger, but they all go through the same sort of process here with investment overview, industry overview, company overview. Try to think if sometimes a company overview is before the industry overview sometimes. But financial information, always have risk factors, always have key individuals, interests and benefits, that sort of thing. Always have the details of the offer. So let's have a look at the company overview. Now it says page 87, but sometimes the numbering can be a little bit off. So 87, see if there's the industry overview. Oh, payment cards. Oh, this is the payment company. I think I remember that now. I have had not a look at this company, but I did say they were listing, and now it just sort of ringing the bell. This company is into payments. So here we go, 85. Still got here we go, company overview. Introduction to Cuscal is an ADI that provides payment and regulated data services in Australia and on a limited basis through a non-ADI subsidiary in New Zealand. They go through the company history. So this company goes all the way back to the 1960s. And there we go, key events. Looks like they were into ATMs, maybe. Ready ATM, first mobile payments application in 2014. Looks like they made an acquisition of a company called Basic with Q instead of a C. Capabilities, issuing card payments, acquiring card payments and ATM processing payments, non-car payments. Okay, so you could also go through, Cuscal provides payment processing services for debit, credit, and prepaid cards across multiple schemes, including Visa, MasterCard, and EFTPOS. So does this company have any sort of moat? Probably not much of a moat. I'd love to see their financial information. Let's have a look. It's going to have a very quick look at the most recent financials. If I can find it here, financial information, there we go. So I've got 3 years of history with forecasts for financial year 25. And a lot of companies will also do that in their prospectus, have a fair bit of financial information, but also have a forecast. I would say almost all of them do that. Nice growth in revenue over the last few years and expecting nice growth this year. Profitable, looks like $36.6 million of profit expected in financial year 25. So more than doubling over the last few years, maybe because of acquisitions. Yeah, so it looks pretty good. So I'm not sure what the market cap of this company is. I'd say based off the profit, 15 forecast profit, I would say maybe between 450 and 600 million. So let's see if that is right. Well, we don't know. Hasn't got, we don't know the shares in the prospectus. It might have it somewhere in there. In fact, sometimes there's an announcement just to say how many shares are in issue. So I'm gonna say, without getting deep into it, this company has a market cap about 450 to 500 million, no, 600 million, maybe something in that range, just based off their profit. So it's a very rough estimation, but anyway, coming in. Oh, what's going to be my stock of the day? I've got to decide right now. Now, we do Novonix. So Novonix, that's not my stock of the day, but Novonix share price is up a lot, 28.4%. Now, the reason this is not my stock of the day is simply because I'm not the biggest fan of these sort of announcements. So Novonix and PowerCo signed binding offtake agreement. The reason I wouldn't say fall victim to this, but the reason this isn't a reason why I usually rush out and buy a company is because I found over the many, many years I've been investing that offtake agreements sometimes don't last or don't mean anything. They amount to nothing, amount to very little. Now, I think one of the reasons why the market might be excited about this announcement is because PowerCo is a subsidiary of Volkswagen. I think they are. Established by Volkswagen in 2022, PowerCo is committed to ramp up global battery cell production. Okay, so it's either a subsidiary or it's completely owned. I think that's what a subsidiary is, completely owned by a company, but Volks or PowerCo is a Volkswagen company. And I wonder if that is why the market is excited about this. So offtake for a minimum of 32,000 tons of Novonix high-grade or high-performance synthetic graphite material to supply to PowerCo from 2027 to 2031. Now, there's a chance this amounts to absolutely nothing. I've seen that time and time again over the past 15 years. Anyway, let's have a look at the chart for Novonix. Is this a reason to get excited? I actually do like this chart. I'm going to say that right now. I do like this chart. Share price has run up. Now, it's not the sort of announcement that would get me excited, but really good volume coming in. Share price has at least a 6-month high. Yeah, 6-month high. And this does look interesting. I definitely prefer this chart to what it was back in March and April. This nice little run up in the share price, I definitely prefer right now. So Novonix chart looks much more interesting than it has for a while. When I say for a while, I'm talking about the last time it looked interesting was way back in 2022 when the share price was like $9. Anyway, so that's Novonix coming in another 3. Now I've got to make a decision between Pro Medicus and IPD Group. I'm going to pick IPD Group as my stock of the day. Pro Medicus share price up 2.65%. And they had the AGM today presentation. And there was something really interesting in the presentation I like. Things are going better than expected, it seems like. And the reason I say that, of course, this is the announcement that's going to take 5 years to open up. So I actually did mention my commentary that I have too many tabs open. That's why it's opening up slow, or it's slow. No, it's not the reason why it's slow, because I'll just show you. Here, I'm going to open up this PDF. It opens up immediately. There you go. And it's still opening up it's ComSec. It's not my system. It's not too many tabs. It's ComSec. Anyway, so Pro Medicus, let's have a look. This is a fairly long, 58 pages long, which annoys me sometimes, but yeah, see if I can find it. I should have actually written down which page it was. Just goes through a lot. There's just so much stuff here. And I remember going through this and going, just page after page. Good pages though. But all I care about was any sort of trading update. I don't care about all this stuff. I just wanted a trading update. And it's just pages and pages talking about VR or something. VP, Apple Vision Pro, which is exciting. That much. Back to the Future. Where's my trading update? I know it's here because I remember reading it. Unless I'm just imagine it, because talking about employees. I don't care about employees, by the way. I prefer less employees. Here we go. Year to date. Finally. Financial year 25, year to date. And what really interested me was the first slide, the first bullet point. Ahead of growth-orientated budget year to date. So they're ahead of where they expected to be. That's all I need to know. I think that's one of the reasons why the share price is higher. And I'm pretty sure even in Capital Brief, they mentioned that. Let's have a look. Pro Medicus flags strong financial year performance. So they sort of mentioned the same thing. So Pro Medicus is an interesting one. So I've been grappling with this for over a year, thinking I should take profits. I should take profits. I should take profits. The markup of this company is ridiculous, 23.2 billion on very little profit. When I say very little, so we're talking about in the last year, this company had a profit of 83 million, which means the P/E ratio of Pro Medicus is 280. It just is not sustainable. Either the company has going to significantly grow their profit over the next 5 years. And when I say significantly, I'm talking about tenfold increase in their profit. And even if they did that, the P/E ratio will be still 28, by the way. And if that's also on the proviso or the assumption share price just goes sideways. But with the chart, it's just... So I'm just thinking, should I sell? I've been thinking this for a year. So I started thinking this, towards the end of last year when the share price was $100. It's now $230. Anyway, so grappling with this, and maybe I should just trade this. But this is a beautiful looking chart. It's been a beautiful looking chart for a long time. In fact, if you look at the weekly chart and you just traded off weekly charts, you wouldn't have sold this. You would not have sold this even during the COVID-19 financial panic. It dipped into the longer term moving average channel, which would be my sort of support zone. And really, this company broke out on the weekly chart. This company broke out in October 2013. You could have bought this company at 60 cents on that particular breakout. 60 cents, and now was it 230? Yes. In fact, you're going to have to start using a log chart for this one. So when you see this chart looks like this, you have to use a log chart. So let's do that now. Oh, no, not adjusted. Log chart. There it is, log chart. If you look at the log chart, it looks much more reasonable, doesn't it? There's a breakout, 2013. Looks quite, yeah, looks quite sane. Okay, and the stock of the day is IPD Group. So I'll do a standalone video. In fact, I'll record that video in a second. So that's all I'm going to say. No, that's not all I'm going to say. Company did release a trading update. Share price down 12.2%. First half year 25 earnings guidance. There's a few things I want to mention about this, particularly what the market did with this company over the past few days. And I might go on a rant. Might go on a little bit of a rant because I do think this needs to be investigated by ASIC. In my mind, there was an almost 100% certainty there was insider trading. Maybe 90, I'll say 95% certainty. I am 95% certain there was insider trading when it comes to this company. And I'll talk about why when I do that standalone video. So look out for that within the next few hours. If not, I've already released it, depending on what time you're watching this video. Okay, I was going to do a few comments, but this video is already at 36 minutes long. So that's it. Again, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.